Ladies and gentlemen, good day and welcome to Premier Explosives Limited Q4 and FY23 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vishal Mehta. Thank you, and over to you, Mr. Mehta.
Thank you. Good afternoon, everyone. I, on behalf of Stellar Investor Relations, welcome you all to Premier Explosives Limited Q4 and FY23 earnings conference call. We shall be sharing the key operating and financial highlight for the quarter and full year ended March 31st, 2023. We have with us today the senior management team of Premier Explosives Limited, Mr. T.V. Chaudhary, Managing Director, and Mr. Srihari Pakalapati, Chief Financial Officer. Before we begin, I would like to state that some of the statements made in today's discussion may be forward-looking in nature and may involve risk and uncertainties. Documents relating to the company's financial performance have already been emailed to you. Now I invite Mr. Chaudhary to share his initial remark on the company's performance for the quarter and full year.
Thank you, Vishal, and good afternoon, everybody. Thank you for joining the call, and we'll begin the call with company's operational performance during the quarter and followed by the key industry updates. In our last conference call, we have already informed about the new development on DRDO technologies, which has been already transferred to us, and we are fully working on those technologies. As we completed design and development of the products for foreign companies, that is for export purpose, supply orders started coming, and we have manufactured and delivered the first batch of supply order in the month of February and the last quarter of financial year 2023. Execution of these production orders will be done in, that is complete execution, will be done in financial year 2023-24. Now, during the year, we have generated healthy cash profit of rupees 16.5 crores with our execution run rate stable and given the nature of our cost structure. The operating leverage of our business will help us to generate better cash flows, which will be utilized towards strengthening of our balance sheet. We had started the year with the order book of rupees 389 crores, and we have received order inflow of almost rupees 340 crores during the year, and we have reported the current outstanding order book as on 31st March 2023 stood at approximately rupees 521 crores, which translates into 2.58 times of our financial year 23 revenues. We have dispatched the first export shipment of rocket motors for the overseas entity in February 2023. Premier Explosives is the only qualified Indian company for countermeasures and the only Indian company which is into export of fully assembled rocket motors. In addition to the rocket motors and warheads, production of mines against new orders is going on at Katepalli plant. This is expected to give good boost to revenue in the coming quarters and financial year 24-25. In addition to the production facility for medium caliber ammunition is ready, and this facility also is expected to start generating revenue in the financial year 24. The defense revenues were affected during the financial year ending 23 due to the delays in clearances for deliveries from departments, that is export licenses, and also the hardware issues. With the first delivery, which should have been done in the third quarter, has come to fourth quarter, and further deliveries will be regularized in the current year. Export billing also was deferred due to the delays in this, and we are expecting this to be made up in the current year. And now coming on the present industry status, about the defense industry, as previously stated and as you may be aware, India's defense sector has a robust industrial ecosystem, and the Atmanirbhar Bharat strategy has been working well with the Indian defense industry. And the Indian government's Make in India policy has also been promoting various industries, including the defense industry at large. Supported by government's continuous efforts of policy and the excellent support of the country's defense sector, India accomplished an extraordinary milestone in defense exports in fiscal year 22-23. Exports have reached an all-time high of about 16,000 crore, up by rupees 3,000 crore from the previous financial year. It has grown by tenfold since 2016 and 17. India intends to spend rupees 2.75 lakh crores on defense equity in fiscal year 2024. Almost all the defense equipment will be purchased from Indian manufacturers, to the dismay of the United States and Russia. India's defense imports are dropping year on year as the Indian defense sector strengthens. India's defense imports fell by 11% between 2013 and 17. And 2018 to 22, owing mostly to a cumbersome procurement procedure, efforts to diversify arms suppliers, and efforts to replace imports with homegrown products. Coming to aerospace industry, with ISRO's success in establishing SSLV, that is Small Satellite Launch Vehicle, and Government of India's encouragement to private sector to take up satellite launching on commercial basis, opportunities are opening in space field, and these are expected to fructify in the coming 3 to 4 years. And the mining industry, where the coal is the major mining sector, according to the Ministry of Coal, despite the hard environment encountered by Coal India, SCCL and other commercial mines in the country, total domestic coal production output has risen to more than 892 million tons in financial year 22-23, up by 14.65% from 778.21 million tons in 21-22. And it marks a historic moment for the coal industry in India. The coal sector's contribution to economic growth has contributed to India's rise under the current government and will continue to meet the country's growing energy needs. India has substantial coal reserves and intends to begin exporting the dry fuel by 24-25. India is moving from a net importer of coal to a net exporter of non-coking coal. As the government prepares to gradually reduce thermal coal imports by 24-25, India's coal output is expected to climb to 1 billion tons in the next fiscal year, up from 900 million tons this fiscal year. The Coal Ministry has revealed that the government has already set a target of 1.3 billion tons of coal output for fiscal years 24-25 and a goal of 1.5 billion tons by fiscal year 29-30. Keeping all these industrial sectors in mind, we expect a healthy growth for your company in the coming years. Thank you. Now I request our CFO, Mr. Srihari, to give a financial performance.
Thank you, sir. Good afternoon, everyone. The results presentation for the quarter has been uploaded in the stock exchanges and on the company's website. I believe you all may have gone through the same. Now I would present the financial results for the fourth quarter and full year ended 31st March 2023. The revenue from operations for Q4 stands at 52 crores as compared to 60 crores in the corresponding period last year, which is a degrowth of 13% year on year. Our operating profit for Q4 stands at 8 crores as compared to 5 crores with a growth of 64%. The operating margin for the quarter stands at 15%. In Q4, we reported a net profit of 2.3 crores compared to 1.2 crores in Q4 with a growth of 98% as compared to the corresponding period last year. The revenue from operations for the financial year 23 stands at 202 crores as compared to 199 crores in the corresponding period last year, translating a marginal growth year-on-year growth. Operating profit for FY23 stands at 26 crores as compared to 22 crores with a growth of 16% as compared to last year. The operating margin of 13% in FY23. The net profit in FY23 stood at 6.7 crores compared to profit of 5.6 crores in last year, which records a growth of 19%. Company has declared a dividend of 1.7 rupees per share for the financial year ended 31st March 2023. Now coming to the order book, the company's current total order book stands at 521 crores, out of which explosive business comprises around 90 crores. The higher margin defense segment is at 304 crores, which is 58% of our total order book, and the service segment, that is operational maintenance, is around 127 crores. The order book represents a strong growth over the previous years. We are confident that with our continued execution run rate, our forthcoming quarters will continue the growth trajectory. With this, we now open the floor for questions and answers. Thank you very much.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask a question may press star then one on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. You may press star and one to ask a question at this time. The first question is from the line of Dikshit Doshi from Whitestone Financial Advisors Private Limited. Please go ahead.
Thanks for the opportunity and congratulations on a good performance. So my first question is regarding the order book. So if you can mention the execution timeline we are expecting for explosive and defense sector.
The explosive and defense sector execution timeline is 1 year, 12 months. Out of which, because of the delays happened in the last financial year, it's most of the orders, they are all of 1 year execution period. But
So you expect that this 304 crore of defense order book we have, that will be mostly executed entirely in FY24?
That is the plan. What happens is, these execution, if the production is in our hand, but deliveries, they have to be effected only after the inspection and clearance, and in case of exports, after getting the export license from government, which sometimes they are delaying the process of deliveries. So otherwise, they are all supposed to be executed in the current year.
Okay, so let's say as per the agreements, they are supposed to be executed this year, and let's say considering some delays also, we can execute it in 15 to 18 months.
Yes.
Okay. And in the current year, our revenue from defense and services was 98 crore. Can you just mention how much was the defense and how much was the services?
82 crores from defense, sir. 16 crores from services.
Okay. Now, this year, our order wins were quite good, 340 crore order win we have. If you can just guide us through, let's say, what kind of order win we are expecting next year, FY24, and which are the major orders we are expecting, or any highlight you can mention, let's say, where we have participated in the tenders and or any major tender opening up this year?
See, in the rockets and propellant segment, the existing orders itself will keep coming. Repeat orders will keep coming towards that, because as we are producing these and providing to assembly to BDL, the orders are expected to continue for the existing missiles, that is MR-SAM and Astra, in the coming 2 to 3 years. And also the export orders also, now only the partial quantity only is converted into order, and we are expecting this to further to increase in the next financial year and the year later. So these are the things which will continue for the coming 2-3 years. In addition to that, the new areas, that is mines, what we are making for different kinds of mines, and also ammunition, which is going to be added in the next financial year and the next.
So can we expect that similar 300-400 crore order win per annum will be continue?
Yeah, that's what we are expecting.
Or it can be even, it can be even higher, or more or less in that range we can continue?
It can be, we are also expecting some big orders in emergency procurement from MOD in the areas like where we are the present existing Indian supplier, that is the countermeasures. I think that once that is finalized, and that should add a big boost to all this.
Okay, and you mentioned that repeat order can come for MRSM Astra. I think recently BDL has signed the MOU for 8,000 crore order for Akash also.
Yeah.
So can we expect some order from that also this year?
Yes. This.
Okay, and typically, is my understanding right that 3 to 4% is the kind of opportunity that we cater? Hello.
Yeah, please.
Yeah. So is my understanding right that for any missile, Akash or Astra, the value of that missile, 3 to 4% is typically our opportunity?
Yeah, very difficult to say because it changes from missile to missile.
Broad range would be, historically, whatever we have executed, if you can just give a broad range, that will also be helpful.
In case of Akash, our that is propellants and energetic materials, the component is higher than that 4% or 5%. Whereas in case of other missiles, where the seekers and the electronic systems and onboard computers, they are the costliest components. In that case, our this will come down in terms of percentage.
Okay, so this propellant plus energy would be what, 7-8%?
That is in case of Akash we can take. But in case of this other Astra and MRSAM, such missiles, it will be around, I think, below 5%.
Okay. And so what I understand that in Akash we give only the propellant or energy product. But when we export, we give the full rocket motor system, right?
Yes, you are right.
So in terms of export, this 7-8% will become much higher.
Yeah.
Okay. How much can you mention?
No, in terms of export, we do not know the other end customers and know what kind of sticker system electronics they are going to add. So since we do not know the final end price, sale price, we cannot comment on our percentage.
Okay. And in terms of export, what I understood is, let's say over last 1.5 year, whatever orders we have executed, those are mostly for the testing thing. And once they tested and the product is proper, matches the quality, then the real order or a big orders we can expect. So can we expect some big orders this year, or it is still in the testing phase and maybe big orders will come in FY25?
No, we have already received production orders, which now we already started production. Like you have mentioned in my base, the first consignment was dispatched in February. So now every month we have to keep on delivering one type of rocket, 100 numbers per month, and another type, 50 numbers per month. So already production process started for 4 different types of rockets and also warheads.
Okay, just couple of things and then I join back in the queue. So in this BDL or in Akash, we are the sole supplier, right?
No, there are other suppliers also, but we are the largest supplier. Maximum quantity we have supplied in past, even now we are supplying. But otherwise there are others also who took technology from DRDO for producing Akash propellants.
So for that, it's like BDL decide the quantity or it's the tender system?
It's a tender system. Usual L1 process, L1, L2.
Okay, and last thing on this 304 crore of order book in the defense, how much would be export?
It was about 104 crores.
104 crore. Okay.
Yeah.
Okay. Thank you. That's it from my side.
Yeah.
Thank you. A reminder to all the participants, anyone who wishes to ask a question may press star then one on their touchtone phone. The next question is from the line of Vijay Goyal from ICICI Securities. Please go ahead. Mr. Goyal, I've unmuted your line. Kindly proceed with your question.
Hello.
Yeah.
Yeah. Hi, sir. Good afternoon. So my question was on the explosives segment. So basically we have done 42% growth in explosives, so 103 crores of revenues. So just wanted to know how much explosive volumes we have done for this year and last year, FY22 and FY23. Basically, I just wanted to understand how much of this 42% growth was driven by volumes and how much it was driven by realizations.
Yeah, Mr. Goyal, if I understand correctly, you are asking for the volumes?
Yes.
That is tonnage that we have?
Yeah, yes, sir, in terms.
No, for bulk explosives, we have done about 7,500 tons in one location and about 500 tons in another location. About 8,000 tons we have done last year.
Growth is come mainly because of the pricing rather than the volumes.
So the bulk explosives has gone up almost by double. I think there was a growth of 100% last year. Hello?
Yes. No, sir. I mean, 8,000 tons of volumes you have done in FY23.
Yes.
And what was in FY22?
FY22 was almost about 4,000 tons only.
4,000 tons.
Yes.
Okay, sir. Thank you.
Thank you. We have the next question from the line of Karan Gupta from Varanium Capital. Please go ahead. Mr. Gupta, please proceed.
Yeah, hi. So I have a question regarding the total volume.
I'm sorry to interrupt, Mr. Gupta. There is a disturbance from your background. May I request you to go to the quieter place and speak, please?
Yeah, hello. So,
thank you.
Is it better now?
Yes, sir. Please proceed.
Yeah, so my question is related to the total capex we are planning for the next 2 to 3 years, and this segment, how much capex we are planning, and the segmentation, segment-wise breakup in the capex.
So we have the plan to incur at least about 25 to 28 crores capex in 23-24. So which is mainly almost all the capex is required for the defense only, not for anything more for the commercial explosives, any some nominal amounts.
Okay, so 25 to 28 crore.
Yes.
Okay, and full goes to defense sector.
Sorry, I didn't get it.
This 25 to 28 crore full goes to defense.
Major quantity will go to defense sector.
Yeah, major amount is for defense sector.
Okay, and any plan for capacity expansion in terms of volume?
No, actually this capex is required to strengthen our existing facilities and adding some production lines and storage facilities. It's exactly this amount is not required. I mean, it's not for the addition. I mean, increasing the capacity.
No. This I understood about this capex, but in future 2 to 3 years, any plan to increasing the capacity of bulk explosive or your packaged explosive?
No. Bulk explosives, it is we have no plan of increasing the capacity because we have adequate capacity and the licensed capacity also. We are only planning to increase the storage capacity because nowadays the bulk explosives are more dependent on the imported ammonium nitrate. So there the storage gives us additional strength. So a small part of it goes for the increasing the storage capacity.
Okay, so
and for defense sector, we have already established the facilities for production. But like our CFO said, most of this goes for adding some balancing equipment, because when the product changes, it is, suppose I give an example. We produce propellants and rocket motors, but all are not same. Different rockets have different motors, different size, different propellants. So specific a product is produced, you have to, depending on the requirement, you may have to add additional facilities and capacities. And that really, we cannot say it is for increasing the capacity, but utilization of the present capacity.
Okay, fair enough. And this ammonium nitrate part, the prices has come down, right, from around 65 to 60,000 per ton.
Yes.
Is it right? Or, yeah.
You are right.
Yeah, so from where we are purchasing, or the most of the industry's players are purchasing in, mainly we are importing this thing, right?
Right. Yeah.
So any reason is, can you share this thing? It's not the confidential thing.
The price, simple thing is, the imported price is lower than the domestic price, local price available.
Okay. So domestically, like some chemical companies also manufacturing this ammonium nitrate part. So we are not, similar with these prices. So that's why we are importing. So who is the major exporter of this ammonium nitrate in the overseas market?
Beg your pardon, please report the last sentence.
Yeah, so major export of this ammonium nitrate in the overseas market, who is this country or player?
Mostly it comes from the Eastern Bloc. Hello?
Okay, so Eastern Bloc, any region or any major player who are exporting majorly to cater all the worldwide?
No, sir. That is not our.
Okay, that is confidential.
I think confidential, but it's not our area that we have ready information to share.
Okay. No problem. Yes, well, that get back in with you then.
Thank you. The next question is from the line of Neeraj Mansenka from White Pine Investment Management. Please go ahead.
Yes, sir, thank you. Just wanted to know about the, you are one of the sole suppliers for a lot of products in the propellants in the missiles. And can you share us when you see the scale up of these happening, or is there a possibility that despite being a sole approved supplier, those products may not be bought by the government in longer term also? I just wanted to know some thoughts of yours.
See, from the order book, you will understand that at least the coming 2 years, that indicates the current status to you. And we have several things which are lined up. Like I have shared in my speech that we have already absorbed some of the technologies from DRDO, which are going to meet the requirements. And government also is going to list them in the negative list for imports. That is, nowadays it is called positive list for local production. So we expect a good continuance of the growth. And like so many products which I mentioned, apart from the rockets and missiles, we have countermeasures, we have mines, we have warheads, which are now all of them are taking off. These are the new additions to our kitty.
No, we are aware of that. I think we have been discussing that on the calls also, that these have been taking off. But the order book is actually, if you see the order book of yours, actually is coming down. Over the last four quarters, the defense order book went down from 360 to 300 range. So just wanted to know a color on you, that are you still seeing that traction there, or you see some more delays by the government in coming up with orders, further orders, would be say?
Further orders?
Yes, because if you see the order book that you were carrying a year back, it was 346 crores. Now it's down to 302 crores in defense side. So you are actually gone down on the order book. Despite the government's intention and entire media releases of lot of buying from the domestic side. So is this just you see a temporary slowdown, or do you see larger delays in executing or getting more orders in the future?
See, the current orders is an ongoing process. While we are executing the orders on hand, we are also participating in the RFPs which are in the process, and you know that you yourself commented we are the one of the very few players in this line. So we are quite confident and that it will continue.
Okay. And the other question is, how much supply to MRSAM and LRSAM will scale up and in the production in the near future?
See, as on date, MRSAM offtake will be in the range of 20 to 25 only per month. This will continue like this in the coming 4-5 years.
Okay. Okay, got it. So any other product that you think we should look at in terms of a larger growth in revenues or order book for you?
There are others which are in pipeline like QRSAM, NGRM, and Astra. All these now are yet to be productionized.
Okay.
We have already participated in the development and succeeded, and we are marked as a qualified vendor. Now they have to get converted into bulk volumes.
Okay. And few times back, 1 or 2 quarters back, you had said that Astra is tapered down and you're looking at Akash has tapered down and you're looking at Akash Prime to happen whenever it takes over.
I'm looking more towards Astra and MRSAM. That's what I told.
Okay.
Not only that, you can add to that exports.
Okay. And exports are mostly on the rocket motors, right?
Yes.
Okay. Okay. Thank you.
Thank you. Participants who wishes to ask a question may press star and 1 now. The next question is from the line of Aman Viz from Astute Investment Management. Please go ahead.
Yeah. Good afternoon, sir. My first question is on the motors, the rocket motors division. So we have I think, peak capacity of 200 per month. So if you can talk about what is the current run rate that we are doing, and at peak, what is the peak sales we can do, as well as if you can talk about the margins we get in this business.
Not clear.
Sorry, can you repeat, please?
Sir, so rocket motors, we have a capacity of around 200 per month. Is that right?
No, I don't know this statement of 200 per month.
Where did you get this statement?
So one of the previous calls, you had said that we can maybe expand it to 200 per month. Is the need?
We have a large license capacity. We have a license capacity for 100,000 numbers of propellant rocket motors per annum. That is our license capacity. And we also have a huge capacity. Only thing is, to add more, we may be requiring some more additional equipment, mandrels, tooling, and some balls like that, which we keep on, as the orders come, we keep on doing. So 200 is not our limitation.
Okay. Sorry, and as of now, what is the run rate that we are doing?
Yeah, with current orders on hand, around 200 numbers per month we are doing, including export and domestic.
Okay, so that was the confusion. And in terms of, say, we are doing around, say, 2,400 motors per year. So what is the sales that we are getting because of that?
What is that?
Sales from the 200. basically the defense, major portion of the defense revenue is coming from there only. Hello?
Oh, okay. Yeah. Okay.
Major
So
revenue from defense for the 22-23 came from the rocket motors and propellants only.
Okay, sir. I thought it is more for the propellant for the missiles versus rocket motors. So has the shift happened that now rocket motors is contributing much more than the propellant for the missiles?
Yeah, propellant for the missile is only propellant. This is including rocket, but it is not the contribution part, it is the volumes. The rockets where we are exporting, the volumes are large. The per annum we are talking about almost 2,000 numbers, and the balance 500 numbers only come for the domestic market. So
No, I was talking in terms of sales breakup. So for FY23, the defense sales that we did, what was the breakup of motors versus say the rockets or the propellant for missiles?
It just the exports of rockets has just started. Like we said that the first consignment has gone in the month of February. So this year I think we'll be able to monitor that and then see that.
Oh, okay. And in terms of
from 23-24 onwards, 22-23 we have just started and we have done some first batch of small quantity.
Okay, sir. So in terms of the current order book of around 300 crore, what is the split of say the rocket motors and
about 100 crores, sir.
Yeah. I think we can have some figures and some discussions on this after the first quarter of the current year.
Sure, sir. My second set of questions is, so last con call, you had updated us on ammunition grenades that we were doing some development cum production orders. So if you can update us, what is the status of that and what kind of sales are we expecting from this ammunition grenades in this year?
Ammunition grenade, the transfer of technology part, that is development, it is DCPP program with DRDO, is completed and our production facility also is completed. So, right now this is against the development order we have done. And we have participated in different RFPs. So we have to see for the maturation of those RFPs and then getting orders. So as on date, except the development order, we don't have any order on hand for this product.
Mm-hmm. But you had talked about there's like 1 lakh orders demand.
Yeah. We have participated in RFPs, so we have to wait for them to be finalized.
Okay. So is it expected the result of those RFPs coming in FY24 or it will take a longer time?
See, these are being procured by MOD as well as paramilitary forces and CRPF and all those. The paramilitary forces and CRPF there, the quantities will be less, but they are expected to come earlier, maybe in the current year itself. But MOD order, the processing and all takes longer time.
Okay. And out of, so 1 lakh was combined or 1 lakh was only MOD you had talked about?
Only MOD.
Okay. So for paramilitary forces and CRPF, what could be the size?
Maybe we are expecting that can be another 30,000-40,000 per annum.
Okay, sir. And we should expect some orders in first half or second half of the year in this paramilitary?
Not in the first half. Because now we have completed the development work. Now user has to come and then see them, user trials. That part will be there.
Okay. So I thought the trials were also done. Trials are remaining as of now.
Trials with DRDO and self, those are completed. Now we are we have already offered to user. Now they have to come back.
Okay. So that will happen say in first half and then finally orders in second half. Is my understanding correct?
Yes.
Okay, sir. My next question is, so you've talked about future growth drivers include QRSAM, NGRM, and Astra. Do you think any of these will get into commercial production in FY24, or if you can talk about some timelines according to your estimates? And when can we see these contributing to revenue?
The QRSAM we can expect in the next financial year, that is QA 24-25.
Okay.
Actually, it is there already. BDL is the integrator for Astra. Astra is expected. We are expecting that Astra by the end of this year it will fructify into a bigger bulk order. Otherwise, right now it is small quantities only going on, 20 numbers, 25 numbers like that. And QRSAM development is completed, but we are expecting this in 24-25. Probably it will come.
And NGRM?
NGRM it is the rocket motor development, that is our part, is completed. But the entire missile assembly, that part is still going on. So the commercial production will start only probably in the year 25-26. That's what I'm thinking.
Sure, sir. And we are hearing a lot of news regarding these new platforms like Prithvi and others also, LRSAM. So any part we might take in those also?
LRSAM and MRSAM is same. We are doing both. The name only is different. LRSAM is naval version and MRSAM is army. So both are okay. We are doing. And Prithvi, no, we are not in Prithvi.
Okay. And sir, are we present in this very different category, ATGMs like Nag and Amoga and Helena? So are we present in those also?
Right now, those these some of them are being done with double base propellants. We are not in double base, but we are in the new generation ATGMs and the small ones, new ones. We are there on it, and we are also DCPP partners. And the other productionizing agencies, we have MOUs with them.
Okay. So out of these, you are explaining the small ones. So small ones will be which ones? If you can name some platforms.
See, one is Vishrod. You must have heard about it.
Yeah. Yes.
Vishrod. Many, I think, the platforms and names rather than going into those things. But then we have other agencies also where we are working for with this UAVs, warheads for UAVs and all those. So those are the areas where we are expanding for future.
So nothing on this Amoga and Nag side because these are double propellant.
Yes.
Okay, sir. So my final question is in terms of defense order. The contribution, the order inflow. So we have 300 crore orders. So what kind of execution are we expecting in FY24 as well as what kind of additional orders are we expecting for FY24?
So actually, as per the schedule, we are supposed to deliver at least 240 crores in FY23-24, which is again subject to the clearances from the departments. And depends on the export licenses and the logistics issues. But as per schedule, we are supposed to deliver to at least 240 crores in defense.
Okay, and the additional orders we are expecting apart from our current order book?
There are a lot of orders in pipelines. Actually, we are expecting some good large orders in near future, but at this moment we cannot comment on that.
Sure, sir. Thank you for answering the questions.
Thank you very much. The next question is from the line of Rupin Masalia from RN Associates. Please go ahead.
Yeah, thanks for the opportunity. See, my questions are, pertaining to a longer time horizon. Say, next 3 to 4 years, considering your capabilities in high energy material and capacities and of course the tailwind provided by the indigenization drive by the government of India. So where do you see defense and aerospace business scaling up over next 3 to 4 years? That's one part. Second is, like you are trying to climb up the hierarchy of value chain by being currently a component or subsystem supplier to being a system integrator. So in the light of that, over next 3-4 years, where do you see the margin profile climbing up? Currently, I mean, whatever margins you are enjoying in defense and aerospace business at EBITDA level or maybe PBT, EBIT level. So in next 3 to 4 years, the questions are scalability, then climbing up the value chain hierarchy, and of course margin profile. So if you can elaborate on these aspects. Thank you.
Okay, the growth-wise, like you yourself said, the defense and sector is going and all those. And apart from defense, the aerospace we have not discussed up till now. In none of the questions it appeared. Aerospace is one area where the new satellite launch vehicles and all those are going to come in, where the private sector is also going to join and other things. So that is one area in the coming 3-4 years we see a big growth in addition to the existing ones. And you are aware that countermeasures, one of the products which we make, now it has become totally indigenous, make in India only, you cannot import. So we are expecting to continue this further orders and increase in that area for the coming 3-4 years, which is also a good contributor, and we have enough capacity to produce.
So, sir, would it be fair to presume that, in next 3 to 4 years, you can do annual business of, say, 700-800 crore kind of revenue from defense and aerospace with around, say, 25-30% margins at EBITDA level? Would it be fair?
Yeah, that turnover target, yes, we also have such figures, but we are a little conservative in announcing those. But yes, we have that. And EBITDA level percentage of 30 to 40% expectation is a bit high.
No, 25-30%, sir. I am saying 25 to 30%, not 35-40%, 25 to 30%.
We are targeting 15 to 20%.
Okay, at EBITDA level.
Yeah.
Right. Okay, that's it from my side, and all the best for future.
Yeah, thank you.
Thank you. The next question is from the line of Chirag Shah from White Pine Investments. Please go ahead.
Yeah, thanks for the opportunity. Sir, most of the questions have been answered. One very basic question I had. I was just looking at your past order book and its conversion to revenue. That ratio seems to be very low. It is in the range of 40 to 50%. So now with 520 crore of order book that we have, what will change that the conversion ratios will improve significantly? That is one. And the second, the past order book that you share, for example, in F19 you had 388 crores and so on and so forth. Has there been any cancellations which have happened during the course of the time afterwards? There are two questions I have.
Yeah, about your observation of 40%, I think that happened in case of 2 orders which we received. That is export orders, where because of the ongoing war and all those, the licensing, export licenses were not issued. Because of that, we had to withdraw from those orders. Other than that, I think we are executing everything in.
So I was just looking at your overall order book, so that you have given in the presentation, and I was looking at subsequently your revenue number.
Sir, overall order book, there is a major component is from O&M, operation maintenance.
Yeah.
This contract for the SHAR, which is there for long tenure, which is for 10 years. So even at this moment, we have 127 crores, which is to be executed in the next 7 years. So this is a fixed contract. Every year you get some 16 to 18 crores continuously. So this you cannot average it, because this is a major component which comes on for the next 7 years. Rest of the order book is normally we are making it to 55 to 60%.
Okay. And so then it should get added to the next. Does it get added to the next year order book, or the order book that you give at the end of the year is a fresh order? and not a carry forward of the past order also.
The current swelling, that is last year's swelling of order book,
Yeah.
yes, that is going on. Execution is going on, and like I mentioned, due to delays in the pre-dispatch inspections and other things, and those orders have flown into the current year, and they'll be executed in current year.
Okay, so last year of 390 crore order, whatever has not been done and which is not cancelled, gets added to current year 521 crore order book, right?
Yes.
That's how one should look at it, and that would have been the trend over the year. That's how you give your order book, sir.
Yes.
And so just a clarification, this O&M order is an ongoing order, right? So every year you must be getting some O&M order.
No, sir. It is a long tenure contract for 10 years, which we received in 2020. So out of which we have just completed 3 years and 7 years is still left.
Okay, so you just keep on reducing that number every year.
Yes, exactly.
Okay. And the second question, generally, are there order cancellations which happen? So you may have added to the order book and then suddenly government decides not to procure. Is it a frequent feature because over last 5-6 years?
No such things.
This happened once in about 2 years back for Turkey, and that was
No. It is not any cancellation of order. It is our cancellation because the government of India did not give the license. That's what I told you, no?
Okay.
2 export orders for explosives, that is high explosives, which we booked. Finally, we had to inform them that we cannot supply because the government of India did not give license for exports. So other than this, there is no cancellation of any order, at least of my knowledge.
Okay. And just one thing, so of the 400 crore of order book or 395 crore order book X of O&M, you are saying 60% can be converted subject to the availability of licenses and other parameters that you indicated.
Right.
Is that the fair way to look at it?
Yeah, you can.
No, actually, I don't understand this convertibility of 100%. It will be converted.
Okay.
No, sometimes it happens that this year, because of these reasons, it may overflow to next year. Then the loss of this year becomes gain of next year. So do we call that as only partial execution?
No, fair point. Thank you very much. I understood. I was just trying to understand that.
Yeah, because there is no cancellation and we are executing all the orders.
Okay.
Yeah.
Thank you and all the best.
Yeah, thank you.
Thank you. Before we take the next question, a reminder to all the participants, anyone who wishes to ask a question may press star and 1 on their touch-tone phone. We have the next question from the line of Aman Wiz from Astute Investment Management. Please go ahead.
Yeah, thank you for the opportunity again. So my question is on the space side. So you've talked about we are already doing solid propellant for SSLV vehicles. So among the other vehicles like GSLV and PSLV, do we also supply anything for those vehicles? And also,
no, we are not making for SSLV. I think you heard wrongly. We are making for PSLV. PSLV, there are strap-on motors, PSOMXL. Those we are making in our facility. And SSLV, yes, we have participated in SSLV in our ongoing service contract at Sriharikota. And new plant of SSLV and all those, the discussions are going on their plant and all those. But as on date, SSLV production is not there. It is only being done at Sriharikota.
Okay. So on the PSLV side, sir, so last 2-3 years, in terms of launch,
we are doing the strap-on motors for PSLV, and we still hold orders for 3 more motors in hand, which we will complete in this current year.
Thank you. Also, the participant has left the queue. We move on to the next question, which is from the line of Anant Jain, an individual investor. Please go ahead.
Yeah, thanks for the opportunity, sir. My first question is on the artillery grenade side. I just want to understand in terms of MOD approval, where are we for that item?
Sir, this we are manufacturing under DCPP program. DCPP program is Development and Production Partners with DRDO. So ARDE and with ARDE hand-holding, we are working on it. And ARDE is interacting with the MOD for clearance and all those. So we have already submitted to MOD that we are ready with the product and all those. So now they have to come and then see they will decide that this is only from my side, that facility inspection and the product trial testing of the product, that has to be done still by the user.
Okay, because what we keep hearing is that there is a lot of shortage in terms of these grenades, artillery grenades, but we still don't see any fast movement happening on this. That's what we keep hearing about it. At the same time,
you are right about the shortage. There is a requirement demand. That's why the DRDO ARDE laboratory is working on it, and they are very closely monitoring, and day-to-day interaction is going on, and samples are tested and tried and done and all those. There are 4 variants in it. Out of 4 variants, 2 are the main requirement, and those 2 are already developed and demonstrated to ARDE. Now MOD we have to demonstrate.
My second question is again on the same thing, because MHA, we were expecting MHA orders somewhere around March-April time frame. But what are the reasons for the delay there, sir?
Not known, sir. We are not aware from their side, because usually it happens, whether it's MHA or MOD. The emergency procurement itself takes 3-4 months. So regular procurement, it may go to anything 6 months to 1 year before they finalize.
And for these grenades that we are making, is this also 100% made in India, and we don't have any imported components in these?
Yeah, right now what we are making are with 100% Indian components, but we may have to look about some imports in future, some of the components.
What is the reason for that, sir? Because I think these have to be made in India only as per the government requirements. What I believe.
As on date, we are dependent on MIL, that is Munitions India Limited, for some energetic components. So depending on their policy of availability, making it available to the other industry, our imports will depend. If they cooperate and they can meet our requirements, then we need not go for imports or anything. But otherwise, we have to look for another alternate sources.
One other question is, sir, because, this is mainly because of the concern of fall in the order book. Of course, we all understand that, the long-term opportunity is there for us, but this fall in order book from last year to this year on the defense, just wanted to understand in terms of, either in terms of tenders or bids or in terms of RFPs, if you can give us some understanding as to, where we were last year and where we are now, just to get a flavor of, how our order book can shape up going ahead. If you can give some value.
We received the major orders in defense only in April, somewhere around April and May. And there has been significant increase in order book from defense during the year 22-23. Out of it, there has been some executions. So, but if you compare with last 22 March order book, there is a significant increase.
No, I understand that, sir. I totally understand that. My only question is...
Mr. Jain, I would request you to kindly rejoin the queue. There are other participants who are waiting for their turn.
Sure.
Thank you, sir. The next question is from the line of Aman Vez from Astute Investment Management. Please go ahead.
Sorry, sir. The line was cut earlier. So, continuing with the previous participant question, so in terms of number of bids and number of tenders we are participating for defense, if you can talk about bid size or in terms of number of tenders that have come, is it increasing compared to last year? or is it the same levels only? If you can quantify in that.
Much more than last year.
Okay. So and on an average, so if we have won, say, 300 crores worth of orders
right now we have participated and then still in the process, and all those almost 600 crores worth tenders are there.
Okay. So this 600 crore ka whatever result be will come out, and then our order book will increase based on this.
Yeah.
And out of this, normally what is our hit rate in terms of, do we proceed for 600? Do you expect 300 crore out of it or even higher?
See, in case of countermeasures and all those, we are the single qualified vendor, indigenous. So we are the single vendor, so we expect the entire quantity to be received by us once they finalized. In case of other tenders and all those, we are only two or three vendors, and where generally L1 and L2 both get based on the 60-40. So everywhere will be there.
So that is very heartening to know. So roughly countermeasures out of the 600 crore tenders will be how much?
So I think maximum, the major portion is relating to countermeasures only.
Oh. Is it like more than 50% is countermeasures?
Much more.
Oh, okay. So that means then it's almost, there's a very good chance we can get that soon. Sure, sir. And the expected timeline of this tender.
Sorry, sir. I would request you to kindly rejoin the queue. There are other participants who are waiting for
you. Sure.
Thank you. May we request the participants to limit your questions to 2 per participant. Should you have a follow-up question, please rejoin the queue. Thank you. The next question is from the line of Manoj Shah from Laxco Investments. Please go ahead.
Yeah, thanks for the opportunity. My question is, for any export orders, do you need to take export license permission from the government on case-to-case basis, or there's a list of friendly countries from where you can export if you get an export order, you can execute the order, you don't need to go for a license?
No, every hazardous product which is listed in the items, we have to take license case to case, order to order. We have to approach and take license. And generally, where we are dealing with friendly countries and all those, we don't get any issue, and we get. But recently, like I was talking, some big order from Turkey and then Ukraine we had to lose because there was refusal.
Okay. I've got another question. Like, your revenue mix has been changing from earlier you used to have explosive, manufactured explosive. Now you are getting more into defense. The revenues from the defense are increasing day by day. So your profile is almost 50-50 mix kind of it. Okay, if I see the last year number, or if in FY22 the defense revenues are much higher. So how do you see it shaping up going forward? Next 2-3 years, if I'm talking about.
So this is an exceptional case. As explained earlier, a lot of turnover has been defense turnover has been deferred to next year due to the explained reasons. But the composition may not be the same in future.
So your company, more than 50% of revenue will come from defense side. That we can going forward. That's what we can expect.
Yes, sir. It should be more in line with the previous years.
FY23.
Yeah. No, 22.
22. Okay.
23 is an exceptional case, as we explained.
Okay. Thank you. Thank you very much.
Thank you. Ladies and gentlemen, that was the last question for today. I would now like to hand the conference over to Mr. T.V. Chaudhary for closing comments. Over to you, sir.
Yeah, thank you. Thank you very much. I hope we could answer all the questions which are listed and all those. And I thank all of you for having patience and then being with us and supporting us. And we look forward for further growth and a better future. Thank you very much.
Thank you, sir. On behalf of Premier Explosives Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines. Thank you.